You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That rockin' tune means it is Thursday. It is noon Central. It is 1 p.m. Eastern. Do you know where your portfolio is? Well, perhaps we'll find out together. Yep, it's time for the Option Block, everyone's favorite bi-weekly source for all things options related. The meatball agitating with me before the show about wanting to make it more than bi-weekly. Would you guys like that? Let us know. Hit us up. We know you guys would certainly love to mainline a bunch of stuff. There's a lot of demand for content out there. I know. We've been seeing the numbers out there. You guys love Boot Camp Back every week. You've been getting a lot of other great content hitting the network these days. You guys are sucking it all down. So there certainly is demand. Maybe we'll see if we could play around with that fun stuff. I got so excited I didn't even introduce myself. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon which all of you are mainlining these days. Hopefully you like what you're hearing. If you do, make sure you leave a review on your platform of choice so other folks can continue. We can continue this influx of new people discovering the program. People are waking up these days to the realization that, hey, they need to learn something about these things, about volatility, about markets, about options. And so they're coming to us even more aggressively than they ever have in the past. Let's keep that flow coming. Keep the new folks discovering the shows. Leave those reviews on your platform of choice. And if you have a question or comment, like many of you do, make sure to share those. We do love to hear from you guys. And I mentioned him before. I'm also joined by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Meatball, welcome back to the program on this fine Thursday, sir.
Hey, it's, glad to be here, and I apologize for agitating.
You're a provocateur, sir. That's what you do. That's what you're here for, to twist the knife a little bit over there. But it's a good idea, an idea worthy of merit. I won't say I haven't considered it myself either in the past, but logistically and everything else, we know there's demand there for it, whether it's we can make it worth our time to put it out there. It's a whole other conversation for another day. And joining us to be part of that conversation is the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the Option Block, sir, on this fine, not really Uncle Mike type of Thursday, but still a fine day nonetheless, sir.
Hey, the sun is shining. We got nice weather. What more could a person ask for? Can you guys hear me okay?
We can hear you now, yeah. We can hear you. Are you on the mobile office again?
I am.
Uh-oh. Double mobile duty this week. Enjoy the fine audio quality to come, listeners, as we head right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading out there. And coming into the latter portion of the week here, we're finally seeing the bull take a bit of a breather, even though it's not much of one. And in fact, the NASDAQ is still up. So the bull is still alive out there in NASDAQ land, up about 0.15%. 0.5%. The S&P taking a bit of a break off, not even 0.1%, about 0.07, and the Dow off about 0.33%. People have been wondering all week, what's it going to take to maybe derail the bull a little bit again. We saw earlier this week the exacerbation of tensions between China and India, some pretty graphic stuff going on in their NSFW stuff there, listeners, if you want to check out what happened in the hinterlands, the frozen hinterlands between China and India. Not what I expected. It's hardcore stuff. That wasn't really enough to do it. Of course, the global rise of the pandemic, return of the pandemic in certain areas, spooking markets a little bit, but not enough to really derail the bull. Got some jobless numbers this morning. Maybe that seems like that's given the market a little bit of a pause. Today, like we said, not much because the NASDAQ still in rally-ho mode. And all of this amounting to coming into showtime, we've got our old friend, the cashiest of VIX, at a little bit shy of the 33 handle. So it was at 33 and a quarter coming into showtime, which puts it down about 4 handles. Now it's up about another quarter. So down about 4 and a quarter points from where it was last show. Our old friend VVIX, a.k.a. the volatility of volatility, still frothy, still strong, but down off its recent very elevated levels. It was over the 150 handle, not on our last show. Now it's come off that a bit. It's down about 137.5. That puts it down about 13, almost 14 handles from last show. And our old friend VXX, the name that continues to like to erode coming into showtime, was at about a 37 and a quarter. That puts it down about 2 and a quarter handles from last show. And actually coming into, as of a few seconds ago, is shy of the 37 handle now, 36.95. So that puts it down about 2.5 handles from last show. Remember, it hit a high of 44 and change not too long ago. So the people have been complaining about the vol levels out there. And yeah, they are pricey if you want to go out and load up on your favorite downside trade. But on the flip side, the movements are certainly sizable out there as well, so maybe some of that vol is warranted out there. Let's go back around the horn the way we came. Let's start in the land of the greasiest of meatball. Mr. Meatball, a lot to unpack, a lot to parse on yet another crazy week. It seems like an endless delivery of crazy weeks on the market. So what was catching your eye out there this week, sir?
Well, that's just it, is that vol is really not that expensive. I was doing a dive through some of the ETFs, and relative to realized vol, they are incredibly inexpensive. I would point to like XLF, XLI, XLB, XLE, even, some of the names like Berkshire Hathaway. There's huge realized volatility in those names. And so, implied vol's high, but it is beyond warranted. It is deserved. And that is why you're seeing some of the price action that you're seeing, and why the VIX has been stiff and volatility not as for sale as I know everyone wants to see. But sometimes you have to recognize that the only way the short vol trade works is if sometimes it blows up in your face. Otherwise, everybody would do it and just bank in money, and there'd be no buyers.
I like that. The only way the short vol trade works is sometimes it blows up in your face. Yes, that is unfortunately a true adage out there. And what have the crazies in the pit chat, a.k.a. the Traded Legion, what have they been fixating on this week? What have they been lighting up and trading up in size this week, sir?
We were looking at Wells Fargo in the XLF space. We've been looking at XLE, Berkshire Hathaway, XLI, Hertz, CHK. And then there was a little Chinese company we were looking at that, landed on some enemies list from, one of the major shorters, ERPH or something like that. I got to double check the symbol, but ENPH is the one that we were looking at. And apparently there is somebody out there claiming that they have fraudulent earnings. And then I don't know if that's true or not. And then obviously we're watching Chesapeake. We're watching Hertz Global. We're basically scanning for bankrupting companies to figure out what we can, what's going to, what's the next one that Robinhood traders buy.
Oh, geez. We'll get into all that in a little bit. I do believe we have a listener question that mentions such things. Before we get to that, Mr. Uncle Mike, sir, what is lighting up your tape? In the mobile office today, sir, a rare visit outside the weather shield for Uncle Mike, sir.
I don't like leaving St. Charles often, but if I need to see a client, sometimes I do such a thing. But anyway, in terms of what I'm watching, I'm not exactly watching Hertz, but looking at the S&P in general, we're kind of right in the middle of what's becoming a new range in a lot of ways, in that the S&P went above 3,000. And the 200-day moving average is around the 3,000 level, so we took that out, so to speak. It went up to around the 3,200 level where the market opened this year, and then came back down, back to the 300 level, and now we're kind of back in the middle again, around the 3,100 level. So I think that for the time being, we're almost in a range-bound market, as absolutely weird as that sounds to say right now. That's what's happened over the course of the last week or two. Now, what's going to be interesting to see is that if we do go to the 300 mark, the 3,000 mark for SPX, we have a lot of support there from the standpoint of the 200-day moving average. We also have the psychological number of the 3,000 mark there. And then on the flip side, if you go higher to the 3,200 mark, you have where the market opened this year. And I'm not convinced that this market's strong enough to be higher for the year, but you never know. It has had it did have a 46% run over the course of the last couple of months. So you never know with such things. So I'm looking at just kind of seeing how the market reacts to things like that. Also, this is a very sensitive market from the standpoint of news, of course, in that if we have some type of bad news, whether it's because of rioting, whether it's because of COVID, whatever the case may be, this market is pretty sensitive to such things, good or bad. So I think that this is the type of market where you really need to be careful. And once again, I'm short-term cautious in a market as such.
Short-term cautious indeed. I'm curious, what does an in-person Uncle Mike client visit look like these days? Are there masks involved and plexiglass and 6 feet? How does all this work in the age of COVID, sir?
I really don't know. I got my masks and I got everything ready, so we'll see what happens. We might be outside sitting 6 feet apart, but I'm not sure at this point.
I guess we'll find out. We'll also find out what's been lighting up the tape from an overall options perspective today. As of a few minutes ago, seeing decent paper on the tape, not a ton. The VIX at about 122,000, so I guess the return of the pits not exactly driving some of the vigor. Of course, it's a weird day. Every day's a weird day out there these days. 122,000, the ADV is up to about 426,000. So ADV ticking up a little bit out there in VIX land. It was about 100K less than that a week and change ago. SPY is 2.2 million. So it's also interesting to see whether some of that SPY volume that had been siphoned away from the SPX will maybe come back to the S or vice versa. If SPY will come down now at about 2.2 million, the ADV 5.3 million, so we'll keep an eye on what's going on out there. S at about 537,000. The ADV has ticked up a little bit. It's up to about 1.2 million, but still a far cry from the 2 million and change we saw not too long ago out there. The Qs at about 346,000 contracts. The ADV 899, so the Qs looking kind of light today, and the IWM at about 387,000, the ADV 691. If you like small caps, I know a lot of you do, stay tuned for TWIFO coming up in a little bit. We're going to have a deep dive. Russell Recon is this week with the folks who do all that fun Russell stuff at FTSE Russell and indeed the SIBO. So it's going to be interesting to see what's afoot out there. I know a lot of you guys have questions about all that good stuff. Let's see what's lighting up the top 10 most actives out there in the single name land. Number 10 looks like it's mostly names out here that you guys are familiar with. Number 10, Facebook, 158,000 contracts. Number 9, Microsoft. That's where we're talking. 167,000 contracts. Number 5, KR. That is, of course, Kroger. So part of the old food supply out there these days at 178,000. First appearance for them in the top 10 in some time. Number 7, we got a lot of interesting names out there. Before we get to the other name on the list here, let's go out to number 7. This is CCL. This is Carnival. Of course, the cruise line's another name that's kind of been battered and beaten up of late. The cruise industry not exactly looking good. In fact, it's interesting. It's like a three-way tie for number 8. We got Kroger at 178,000. Number 7, which is technically a tie for number 8, there is 178,000 as well for Carnival. And number 6, Bank of America, without their friend Boeing next to them this time, also at 178,000. So a three-way tie there for that spot. Then we get up to number 5, CLDR. Whenever I see that, maybe this betrays my old school East Coast leanings. I always still think of Caldor. Chain store we used to have back in the day, back where I was growing up on the East Coast. Not really a thing anymore. Of course, it's Cloudera. Ticker symbol, of course, CLDR. They're at 180,000 contracts out there. So a hot day for them. Looking at them, they're up about $1 or about 7.7%. So a big day for them at $13.61 right now. I'm not sure what's going on out there. Talking about maybe talk about takeover or IBM buying them. Either way, something's driving up their stock out there. Number 4, Roku, 252,000. Everyone's stuck at home. Everyone's looking at Roku. Roku's always been pretty volatile of late anyway. Now it's back in the top 10, 252,000 contracts. Number 3, Tesla, 307K on the tape. Numero dos, Bank of America's best friend, Boeing, 313,000 contracts. And number 1 with a bullet, Apple, 317,000 contracts. On the tape out there, let's look at some interesting stuff. Speaking of on the tape, we have, this is now Callie Cox, used to be Callie Boast, used to work over at the Journal, I believe it was. Now she's over there at Ally Invest, working with Mr. Overby and the rest of the crew. She tweeted out this nugget earlier this week. On the 15th, S&P fell 2.5% intraday. Remember, we were talking about that on our show. Then recovered all of its losses to close up on the day. If you're curious how often that's happened, that's the third time that's happened in the last decade out there. So it isn't perhaps as rare as you might have thought. It was like January 23rd of 2008 was another time that has happened. And also looks like, well, this chart's kind of hard to read out here. But yeah, it's a few. Check it out for yourself. We'll retweet it out here exactly what the other dates were. But interesting stuff out here. Nonetheless, a little bit of it just shows you kind of how rarefied we are in the markets right now, but perhaps not as insane as you might think. Let's look at some earnings really quickly out there. We do have some new reports. There are still some names popping off this week, not as many as there used to be. Obviously, the season mostly drawing to a close. We talked about CarMax earlier here on the network. We have Commercial Metals Company, everybody's favorite out there. Oh, here's one of your favorites, Mr. Meatball, Darden Restaurants. Ticker symbol DRI. They're popping off on the 25th before the bell. Let's see. The report here, $74.19 was the stock price going into the report. They were pricing in $4.35. In the past, they moved almost $5.50. So dramatically underpricing. Mr. Meatball, how does that make you feel? I know you have a love-hate, mostly hate relationship with Darden Restaurants. How does it make you feel that they're pricing in so little vol going into their earnings, sir?
It just tells me that the bad news is already priced in, and they're not expecting a lot of upside. I've my Greenwood interns have started this week, and I've been having to go off a little bit on the travails and terribleness of Olive Garden, and many are shocked. I always tell them, it's not that hard to make bread. Any bread is good. I could take a loaf of Wonder. If I throw a piece of Wonder Bread in the microwave for 15 seconds and put butter on it, you're going to think it's delicious. It's just the facts. Bread does not a good restaurant make. Remember that, people.
I don't know. I'm not a big Red Lobster fan, but those freaking biscuits are pretty darn good in Red Lobster land. As we debate buttered bread, let's keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, let's get into it. Let's get weird. Let's get wild. Let's get odd. Let's unleash the eye of Sauron. Let's see what it comes back to with us today. Let's start with this one, actually. Going all the way out to CAMP. Ticker symbol CAMP. This is CalAmp Corp. Everyone's favorite. This is an Irvine, California-based provider of Internet of Things software applications. So there you go. They provide the software that runs your fridge and your coffee maker and everything else out there. Ticker symbol, like I said, CAMP. You think CAMP might be some sort of outdoor equipment manufacturer? Nope. They make Internet of Things software. So there you go. That's why I always love the appropriate tickers out there. Trading $7.88, off 13 cents or about 1.6% today. Let's look at them over the past year, see what they've been up to. A year ago, they were trading a wee bit north of there, about $10.30. And then they spiked up not too long after that to all the way to $11.68. They hit a 52-week high of $12.32. Looks like that was probably around. They spiked a few times over that. Looks like they had a peak to trough a lot of times up to almost $12, and then selling off again in August to $9.50. Then up to almost $12 again in September, hanging out there for a while. Back down to $9.50 in October. Back up to almost $12 in November, and then back down late in November to $9.95. A lot of this peaks to trough range here. Interesting. If you're into range-bound names, maybe this was an interesting one for you out there. And then they sold off. Looks like they got up to nearly $12 seemed like that was a hard level for them to break. They hit it once, $12.32, and that was about it. And then they sold off again in late December to $9.36, down to $9.26. Then they were rallying again going into February. They hit almost 11. Then we know what happened in February. This thing took it on the chin. They got down to $3.70. I guess no one was buying Internet of Things devices in the height of the madness, listeners. And they kind of hovered there for a little bit. They tried to recover, then they sold off again in April, back down to $3.99. So it looks like maybe they faded that first rally. Then eventually they started to get their legs out from under them again, and they rallied all the way up to $9 even on June 8th. And then someone decided apparently that was a bridge too far because they sold off instantly back to $6.88 a couple of sessions later. Now they're rallying from that again. They got up to $8.01 recently, now trading $7.88. So a long, storied, kind of turbulent year here for CAMP. More volatility in Internet of Things than perhaps I would have predicted. Let's fast forward to today. Let's see what our Eye of Sauron discovered for us today. Looks like it was some put action. In particular, it was the SEP $5 puts going up for 40 cents out there. Worth noting, this market a wee bit wide. As you might imagine, I don't think CAMP is the biggest of names. In fact, let's find out what the ADV out there. The ADV out there is 406 contracts. So, yeah, not a lot of paper going up in CAMP every day. This puts were 10 cents at 95. So you want to see still some of the lingering issues with liquidity out there in the option space. Try to trade some CAMP SEP 5 puts. You're going to get nearly a $1 wide market. So this guy had to come in, or gal, we don't know, and blast. Looks like blasting these away for 40 cents. I doubt he got a deal and bought them for 40 cents, but maybe he's got a really good broker. So it looks like he's harvesting a little bit of the old risk premium. 40 cents, 5,000 times over there on the Amex. Worth noting, there are some earnings between now and September expiration. The next cycle coming up next week. There's one of the names popping off on June 25th. I wonder, let's look really quickly. I wonder if we have these guys in our earnings. No, we don't have them in our report, but maybe we'll have them over the course of the coming week. Not a name everyone asks for all the time. Where's CAMP? Where's CAMP? Maybe you think this would be Cabela's or something. Nope, it's Internet of Things software company. Let's see. So, yeah, Mr. Meatball, a lot to unpack here. Sizable puts going up, a crazy wide market out here in CAMP as well. What are your thoughts, first off? You think these are harvesting, or do you think they're buying these bad boys? That'd be a hell of a buy if they did indeed do these. And then what are your thoughts on what looks like to be a pretty sizable line in the sand here in CAMP, sir?
Yeah, I mean, that is it. Absolutely looks like it is premium harvesting based on what I'm seeing here. I mean, it's definitely a line in the sand, although who knows? You know, the one thing I'm noticing is the volatility is up 24% today. So, you know, looking at this, I think they were a buy. And now they traded 40 cents. The outgoing market is dying at 35. So I think they printed these through, and the customer was a buyer. And I don't know why. But yeah, this was, I think, a buy.
Interesting. Let's mark those down in the to be watched. Like I said, that market was so crazy that you could tell me anything was going on out there, and I would have to believe you. But yeah, I guess they got a pretty decent broker, and that would sound like that was a pretty ridiculous market. I don't think they were really nearly a buck wide. Speaking of crazy markets, Mr. Meatball, sounds like you, the name we were just talking about earlier, Caldor, which is what it's known to me, a.k.a. was it CLDR. Looks like some size upside, sir. What are you seeing out there in CLDR today?
There was all that volume, and I'm looking, the implied volatility in CLDR is up 22 points. And it's all on the back of July, where there is a customer out buying as many of the July 15 calls as he can. Right now, we've seen over 100,000 of these trade. Currently 101,671 have traded, all the way up to $1.05. They start buying these at a much cheaper level, and we've seen some residual trading all around it. We've seen vol up on the 17s, vols up kind of across the board, but that July area and everything in front is super bid. So, but it looks like one individual with a giant axe to grind is driving what's going on in CLDR Inc. Is being very much driven by one customer with an axe to grind.
Did you guys have CLDR stores out here in the Midwest too?
No, and these started trading at 40 cents when CLDR was $12.71, and the customer has run these all the way up to he's run the stock up and run the underlying up, because I'm looking prints of 50 cents. They ran them up to 90 cents. This is a giant axe to grind. This is where one customer with unsatiable hunger for July 15 calls can drive them up. Hindsight 2020, I think that the broker should teach this customer that if he had just come out and said, "Hey, I need to buy 100,000 of these," his net purchase price is probably lower. But that's a live and let learn. Educational event, educational session for our new CLDR call holder.
It's always going to be CLDR to me out here. Yeah, you should have the block execution, large size block execution class at Option Pit. Maybe you and Tubby can walk folks through how they should do this thing. But you're right. This is 101,000 total have gone up today so far at all sorts of weird chunks, listeners. 2,021 for $1, 1,523 for 94 cents, 1,371, 41 cents. Yeah, all right, this guy has just bid this up to high heaven. So somebody is thinking these rumors, I'm not sure if they are rumors, if they're fact, that this IBM, it looks like the IBM story is one of the top ones. IBM may pick these guys up. But either way, potential suitors takeout price amid sale rumor here. So they're discussing, could it be IBM, could it be others? But either way, someone's got a huge axe to grind on that 15 strike. Not exactly that unreasonable given the fact that it's $13.50 right now, listeners. So $1.50, obviously he needs a little bit more room for that to run. 40-cent kind looking good. The buck and change kind, maybe a little bit more of a bridge to burn. This is kind of the old school market maker nightmare of like, how are these puts, how are these calls? I'll take them. How are they now? That's when you start to get the hairs on the back of your neck start to tingle, and you start to say, wait a minute, am I stepping in front of a massive train? Whoever sold that 40-cent kind, obviously, hopefully they got stock against it, but still, that's a lot of calls to come in after the fact, and that's kind of the literal definition of the train running you over there, bidding that vol up to high heaven in the process out there. We'll keep an eye on those ones as well. Let's see what else our Eye of Sauron has found for us today, listeners. A lot of interesting names in our Unleashed Eye of Sauron today. We're going to go out to GLPI now, everyone's favorite. GLPI, ticker symbol GLPI. I like when the newcomers pop in here. This is Gaming and Leisure Properties. They're trading $37.84, off about $0.50 or about 1.3%. This is a name that, unlike our last few names, had a pretty quiet year. It was $40, almost $41 about a year ago, and it kind of hovered right around that range, a few bucks north or south, for pretty much the entirety of the year. Then it started rallying in December, got up to 43, 44, 45, all the way up to $50, $50.30. on February 21st. I think you all know what happened after that. It took it on the chin, got down to as low as $13.04 intraday. So from $50 down to $13.04. This is, I should mention, by the way, this is a REIT. Obviously, they focus on gambling and gaming properties, but still, REITs obviously took a big beating in the big sell-off there in March. Not a lot of folks looking for any sort of real estate, people fleeing from large real estate areas, so REITs took it on the chin. This one, no exception. Then it kind of rebounded pretty quickly. A week and change later, it was trading 27.5. Then it kind of plateaued there for a while until May. So about almost 2 months it hung out in that level. Then on May 15th, it started rallying again, got up to 35, then all the way up to $40.41 on June 8th. Then it looks like it kind of retreated from that level recently. Now it's kind of hovering at $37.83, giving off half a buck. So this thing has had a pretty decent recovery from that nadir of $13.04 down. Let's see what our Eye of Sauron found for us today. It is on the put side. Surprise, surprise. Got some GLPI puts to the tune of the July 33 puts going up for $1.06. Another pretty wide market, not quite as gross as the previous one. The guy had to put up a few thousand. That's probably why he didn't come in marked with 100K to go, because, I mean, he would have got a real market, but he probably was just scared off by that absurd market. And let me test the waters with a few thousand and go from there. Maybe kind of hard to blame him in that environment. But yeah, we see these are 60 cents wide. These were 85 cents at $1.45, and these puts went up for $1.06, so about 20 odd cents off the bid there. 3,700 times over there on the NOM, aka the NASDAQ options market. Worth noting their earnings on the 5th of August after the bell. Mr. Meatball, what do you think about these puts in GLPI? Are these? Do you think these are a line in the sand? I think that this is another good broker spitting the uprights right here. I should say splitting the uprights. And what's your take on these pretty sizable GLPI puts?
Yeah, I think this one might actually be a line in the sand. That's my best interpretation of what I'm looking at.
Let's see. GLPI, not exactly known for blowing the doors off. From a volume perspective, their ADV is 580 contracts. So you know what? We're going to keep an eye on this one, too. See if this line in the sand is crossed out there. Listen, we'll give you a little bonus one here in the odd block today. Usually like to do 3, but we'll throw in. We weren't expecting the Caldor call Palooza out there. Let's go back to June 4th on the show. Let's review some calls we saw that are still open, but are looking kind of weird. This isn't everyone's favorite Chinese car name. This is NIO. Been trading and moving a lot of late. Well, I won't tell you where it is right now because it's a bit of a spoiler. But a year ago, it was trading $2.53. So it's up a little bit since then. At the time on June 4th on the show, the profile will look to be some pretty aggressive call love out there in NIO to the tune of the June 7/2 going up about 5,000 times for 32 cents. This is through the offer, so someone wanted to get these done. A lot traded on the day, a total of nearly 19,000 trading on the day. So someone really had an axe to grind. Not quite as sizable as the Caldor ones, but still pretty close to it. The stock closed, if you're wondering, at $5.97 on June 4th. So these are pretty substantially out of the money. $1.50 out there. So this thing had a lot of room to run, and it needed to run. And we have seen the stock run quite a bit. Right now, the stock is trading $7.14. So it's been a good run, but it's kind of that weird scenario, listeners, where you got most of the move you needed, but perhaps not quite when you need it. Remember, when you're buying premium, you need this thing to pop early. But by the time it hits now, the decay has already hit. It's going to be kind of hard to make those bad boys work out. So not surprisingly, perhaps, that there's 20,000 still open on that strike. Worth noting, there was a big active day for these again on the 15th of June, just a few days ago. 28,000 total traded. So it looks like maybe the guy didn't get out then, though, because the OI only really changed by about 3,000. So it seems like someone came in. There was a lot of churn and burn on the strike for some reason on the 15th. But it doesn't seem like our friend closed because pretty much his exact size is still open on that strike. So Mr. Meatball seems like someone again, there's still 24 hours to go. So maybe we'll sing a different tune after the expiration on Friday. But it seems like, Mr. Meatball, someone maybe overextended themselves a little bit with about 20,000 of these June half calls going up for around 32 cents when the stock is still 30 odd cents shy of that strike, Mr. Meatball. Would you concur?
Yeah, that's my best guess. I think you're correct.
Look at us agreeing like crazy here.
I know,
I'm not used to this here. I'm used to the point, counterpoint. How dare you say such mad things? But no.
No, that one's pretty much dead on. I think you've hit the nail on the head. Sometimes even the blind squirrel finds a nut.
Yes, even the blindest of eyes of Sauron can find some good paper every now and then. Let's see what you guys have in store for us with a little bit of your Thursday mail block.
It's time to take your seat on the All-Star Panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, let's get down to what you guys have on the... we got to start it off with this one. This is a big story. A lot of you hit us up about it. People called me up over the weekend about this story. It's a tragic... Not often do we dovetail options and tragedy to any real degree, but this is truly tragic. And it's a sad example of, if people would spend a little time, working on education, even listening to a show like this, it could have perhaps avoided a tragedy. Also, it's clearly incumbent on the broker to convey these things in a more logical fashion. But, yeah, this is a pretty bad one. This comes from Neil, weird spelling though, Nial. He says, have you guys seen this terrible story? He should have listened to your show. And he links to a Forbes article. There's a bunch of different places writing about this 20-year-old Robinhood customer dies by suicide after seeing a $730,000 negative balance on here. And it comes from this young man, Alexander Kearns, a 20-year-old kid right out here in the suburbs of Naperville here in Chicago. He committed suicide. He left a note on his computer. It says, how is a 20-year-old with no income able to get assigned almost $1 million worth of leverage? And this has begun a very deep dive into what the heck happened here, how this kid, I think, ended up driving in front of a train. So the whole thing is just really, really tragic on every level. Turns out he was a Robinhood customer. And so people have been taking Robinhood to task over this. It sounds like somehow this author got access to a screenshot from his mobile phone that reveals his account had a negative balance of $730,165, even though the cash balance only was $16,000 in the account. But it kind of gets into it. Looks like he was selling put spreads on Amazon. Amazon, obviously a pricey stock. You're trading multi-$1,000 stock. These options are going to be pricey. And if you're going to get assigned on them to buy the underlying, that's expensive too. And that seems like that was what happened here. Robinhood obviously not talking about this, but people who are, and I was talking to some folks at OCC who were kind of digging into this as well, because this is a tragedy for everybody, is that they seemed like this guy was selling put spreads. And you know what happens, listeners. You sell a put spread, it's supposed to be a limited risk type trade. But things get a little crazy, particularly from a brokerage perspective, when the underlying is settling out in between the strikes. And it seems like that is what happened here. Let's see. We don't have his exact strike prices, but it seems like he was selling puts, and he might have got even assigned early on one of the legs of the put spread. So he saw this massive debit hitting his account to buy the stock, which was in this case $700,000. Now we all know that would have been cleared up in a couple of days once the trade went through, and then it was all processed. He wasn't really on the hook for that money, but clearly he didn't know that. And clearly his broker, Robinhood, did not go out of their way to express that. So you could see how if you're a young kid, not very well-versed in the world of options, somehow you got onto this premium harvesting strategy. You think maybe you're doing a limited risk type trade, and then you see this massive debit. From all accounts, his parents said this kid was really judicious about money, was really into his savings account. This kid thinks he just ruined his life. And so he took his life, which is tragic. And obviously anyone versed in options could have sat him down and said, wait a minute, you're kind of just in between the strikes. Let this stock get canceled out. You'll get credited and all the other things will happen. The stock will get cleared out and you'll be okay. But, that was not the case. And it seems like, this just had tragic consequences all around. Not a good time for Robinhood. They're getting beaten up on this. Also, it looks like they're down again. They put out a tweet this morning. We're currently experiencing issues with our services and are investigating the issue. We'll update the status page with latest. So this is, I think, the third time Robinhood has been down. This is not even a crazy market day. This is a normal market day. So it's been a bad time for Robinhood out there. This obviously is tragic. No one wants to see anything like this happen out here. I don't know, Mr. Uncle Mike, you have any thoughts on this one and how just getting carried away, maybe with a strategy that they clearly didn't fully understand, could have such tragic consequences, Uncle Mike?
Well, so did he get assigned on expiration? So was he long all that Amazon over the weekend after the long leg of the put spread had expired too, or did this just happen midweek?
I think it happened midweek. No one's really clear on the details because Robinhood won't release them. People are just speculating. But it seemed like he may have gotten assigned on one part of the spread, and then obviously the other part was still there, and that kind of freaked him out a little bit. I don't think it was after the spread itself expired, because you're right, then he would have had a stock debit, and that would have gone away as well. Again, we don't know for sure, but either one of those two would be spooky to someone who doesn't really know what they're doing.
Well, and I remember one of the first time I ever got assigned on something, this was maybe maybe 6 months into my trading career, and all of a sudden I woke up one morning and it said $50,000 in parentheses in my old Options Express account. And so it kind of freaked me out at first, but then I realized that all I did was I put in a trade to cover the stock, and then it was gone. And so it wasn't an issue. But I do think it's really important that you're educated on what you're doing. But, I mean, the sad part of this is that even if, let's say that he got assigned on Amazon and Amazon went down over the weekend and he really did owe $730,000, the saddest part about it is that he's willing to take his life over something as frivolous as money. And so I feel horrible about this in that even if it is the worst case scenario and he did owe the $700,000 or whatever the case may be, that life is just so much more precious than $1 billion or whatever for that matter. And so it's very sad, but I think just the lesson here, I think it's twofold. Number one, make sure you have an understanding of the products, because with a put spread, so long as you understand expiration risk, you should be fine. You need to close things out before expiration. We've said that on this show 10 trillion times. So make sure you understand the risk. But I think the second most important lesson out of this is that life's a heck of a lot bigger than money, and it's not worth it over something as small as money, even if it was the worst case scenario.
Yeah, agreed. Even if you did owe that, obviously it's not worth a life. And of course, listening to something like this happens, you're a young kid. You could get a lawyer involved. You could negotiate that down. You're probably not going to be on the hook for $750,000 out there. But still, yeah, this is tragic. Mr. Meatball, you spent a lot of your adult life educating people on options, so these types of horrible things don't come to pass. What are your thoughts here on this tragedy with this Robinhood options customer?
I mean, I think the big issue here is they don't have a customer service line for him to reach out. And something like this, this needs to flag to somebody to reach out. If this happened at Interactive Brokers, somebody would be in contact with you. This assignment stuff needs to be handled. It gets handled in a relatively smart manner, and almost every broker, there's some sort of assignment on an undervalued account. They close the stock, figure it out with whatever you paid and whatever it costs you and whatever. And without getting too deep into what was the why did he do that and this and that, the sad truth is that at a minimum, I think this points that Robinhood does need to probably have some sort of way for people to ask them about, hey, this just happened. What's going on? And do I really owe this? And they need to have educated people behind there that are able to talk about it, right? You have a problem at any broker, and they're going to be able to help you. Even some of the online ones. I work with Victor Jones over at Doe. I know they have people that will help you with that process. And so I think it's just sad. And I don't think it's fair to blame Robinhood for this young man's death. But I do think that this is which is absolute tragedy. But I do think that it is, I do think that this needs to be a lesson on some protocols Robinhood needs to adopt.
Yeah, we said it before, we'll say it again. If you're going to trade options, trade with a broker that understands options, that prices them and conveys that accordingly, and also has hopefully some sort of educational material and people you could contact if you do have questions out there. It's not all about just cheap commissions. I know you guys like that stuff, but you got to have a little bit more behind. This is unfortunately the extreme dire consequence of not having that kind of stuff. And again, it's not, you can't pin this on anyone. Obviously, the person did it themselves, but it's just a tragic series of events, and yeah, we'd never like to see this. I never thought I would see. I mean, we've seen institutional people take their life after causing massive fund losses and things, but this on a retail side for a young kid like this, it's just it's not good on any level. And so yeah, listeners, if you want to dabble in options, please take the time to educate yourself. It doesn't have to be with us; it could be with anybody. Just get out there, go to your broker where it's free, go to a mentoring service like Mark's, or call up a guy like Uncle Mike. Have them walk you through it, but this extreme level is not a good choice, obviously, for anyone out there. Let's move on here. Jillian wants to know, hey, you guys, I like your suggestion of swapping out my SPY portfolio for cash and some call options mentioned on the last program. That seems like a sane approach in these insane times. Any downside that I should be aware of this approach? Thanks and love the show. Well, this, Uncle Mike, this is what you and I were talking about on the last show. I think we had someone write in and ask about what are our ideas for hedging at these levels out here, and that is one potential use case. Obviously, the old school way of buying puts and put spreads a little bit pricey right now. Kind of horse has already left the barn a little, not quite as bad as they were a week and change ago, but still, that's something to be cognizant of when you're going on out there. Check out the conversation I did with the folks at Argy recently on the network too. They have what they term a black swan fund that pretty much just does this, which is a little bit weird to call that a black swan fund, but it does offer a little bit of this, which is kind of interesting. Obviously, if you're buying premium, you have to look at the overall volatility levels, and that's something to be cognizant of. We are still relatively inflated out there. Let's say you're looking at SPY, your vol is still going to be higher than it was not too long ago. So bear that in mind. And also the skew is going to be an important factor as well. It depends where you're buying your calls. If you're doing a straight up stock substitution, maybe you're going a little bit longer term, a little bit more in the money, in which case it's not as big of a deal. If you're going more near term, kind of a little bit of a flyer out of the money calls, it's going to be a little bit of a different deal. Mr. Uncle Mike, we were just talking about this on the show last week. What are your thoughts here for Jillian on some downsides or caveats she should be aware of when thinking about maybe swapping all of her portfolio for some calls?
Well, I think that number one, make sure that you're leveraged at a good level. If you get out of all of SPY and then buy a bunch of out-of-the-money calls that are SPY, then you've just given yourself way more leverage and way more risk. So I wouldn't recommend that. So like what we had talked about is that let's say you have 80 to 90% of your portfolio in cash and then you have a little bit of money in calls. Number one, I think it's important to find something to some type of an interest rate, an interest-bearing investment with 80 to 90%, or whatever level you choose. But number two, with the calls, I think it's important to be fairly active with them, in that if you can trade with a line in the sand type of style, meaning that I'm just going to stay out of the market until it goes above this level, like I've said on the show a bunch, when the market's negative on the year, I typically do not have a lot of exposure in it, which I really don't right now for my SPY call strategy. In fact, I have none right now. And I might get in a little bit here and there, but it's going to be extremely minimal so long as the market's negative. So I think it's important to have your own rules for lines in the sand or things like that. If you want to talk, I'll be happy to give more detail on what I do. Feel free to give me a call.
Yeah, if you have questions, hit up Uncle Mike. He'll walk you through. Let's do a couple of other quick ones here. Tell Tall says, sad to hear the situation unfolding in Chicago. I concur with Mr. Longo saying he needs to be liquid in these situations. May I suggest a new indicator, the National Guard indicator, a.k.a. when the National Guard rolls up to your doorstep, then it's time to go to cash. Stay safe, great leader. We need you to keep the content flowing. Well, I feel like I'm the leader of North Korea now, but I appreciate that, Tall. Yeah, it seems like things have pretty much returned to normal. The bridges are all pretty much down here. Most of the recent situations have been fairly peaceful and not that sizable at all. The looting and rioting that we saw unfolding tragically not too far from here, it seems to have mostly dissipated. The National Guard is gone, which you're right. I concur with that. When the National Guard did roll up, I did get liquid, shall we say, because that's not an environment where you really have the option of messing around at that point. So, yeah, that was interesting times. Let's hope I never see a repeat of that anytime in the near future. And it seems like for now, Mr. or Mrs. Telltall, that seems to have mitigated itself. So Thank goodness for that. We got a follow-up from the guy we were talking about last show, Beef Entertainment. I'm not sure what they are. Record label entertainment company. They're the ones who sent in. They're like an entertainment company with hundreds of thousands of Twitter followers. For some reason, they decided to share with us their portfolio. Apparently, this company or someone there has a pretty sizable portfolio. I believe it had something along the lines of 234 positions in it. And we kind of debated / mocked that a little bit on the show. Said maybe pare that down to 20 odd positions you could actually sensibly pay attention to. He followed up. We said that's probably too many. He just followed up and said, "You're right. Laugh out loud." So yeah, I guess this guy obviously has a sense of humor about it because he's sharing it with us and he's laughing out loud about it. But hopefully, Beef Entertainment, you have taken our advice and mitigated that somewhat because that's just too many things. Even Kramer at his craziest doesn't think he could track 234 positions. So dial yourself back a little bit, get it down to a handful, dozen or so, maybe 24 at the outset that you think you could have some sort of even that's a lot, but some sort of reasonable knowledge of. Get rid of all those crazy little one lots you had in there, and maybe I think you'll be a little bit saner. Hopefully you'll be saner with us as we head on into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, where we tell you what we were watching for this week. Powell was testifying most of the week, so that seemed like it had a little bit of a break on some of the aggressive side of the market. Whenever he speaks, it seems like it spooks the market these days. People are actually asking him, why don't you just go out and straight up buy stock? So a lot of interesting things popping off there. Let's go back around the horn. We'll start with Uncle Mike, sir. What are you watching for the rest of this week into the weekend?
Well, like I said, I'm definitely watching the 3,000 mark in the S&P 500, watching any newsworthy events, things like that. And then the other thing that I'm just finding pretty interesting right now is just, I know we've talked about it, but the FANG stocks, in that they're still really the leaders of this marketplace. I'm curious to see that at some point people are going to take profits on the FANGs fairly significantly. Maybe it's now, maybe it's another 20% up for them, but who knows? But if they do, is money going to shift to other stocks, or is money just going to shift into more safe investments such as bonds? That's what I'm watching. Yeah,
that's a big question. We saw, obviously, the insane sell-offs, not quite profit-taking, but just liquidation back in March, and they sold everything. That's obviously a little bit of an extreme scenario. Hopefully, when they start taking their profits on the FANGs, they don't come for everything the way they did, but it's an open question what they will do with that cash when the time comes. Mr. Meatball, same question for you. What are you watching for the rest of the week into the weekend, sir?
I'm watching whether the markets sell off, how we move. I want to see some of this COVID news starting to come around, and I want to see what markets do. They've been, after a lot of volatility, we've seen things just kind of flop around here the last couple of days. So I'm very interested to see kind of how we close the week. I think Friday's tone and the rest of today's tone are really going to set things straight. I'm also hoping that we get a little bit of a rally so that my wonderful, amazing VIX guess is within it lands on the bullseye, but we're pretty darn close.
Yes. Well, we have about 24 hours exactly, almost, until we find out who is the winner of the great contest known as the Crystal Ball, listeners. Unfortunately, that music means we come to the end of at least this program. You're listening live, you want more, don't worry, we got more coming for you. We'll be back in exactly half an hour to talk all things futures options on the TWIFO side. Going to talk a lot of energy, probably. That's been lighting it up of late, dominating the tape. Also, a lot of small cap. They're coming into recon, and so a lot of vol, a lot of things going on out there as well. We'll have some folks joining us. Talk about that and a whole bunch more of your questions. Join us, TWIFO, in a little bit. Listen after the fact. Just hitting next. But before we go to that, let's go around the horn, see what our cohorts here have in store for us, starting with the greasiest of Meatball. Mr. Meatball, sir, if folks are intrigued, they want to learn more about what's going on in the world of options, where should they go? What should they do?
Go to optionpit.com, sign up for our email list, and we will gladly send you lots of fun, amazing content that you need to read.
Fun, amazing content. Begin your journey. Optionpit.com. Then you get the emails, Then you sign up for the Legion/Pit Chat. Then you get the Fun Ball Trading Club with the cool jackets and the secret handshakes. Then you get all sorts of other goodies there. OptionPit.com, the place to begin your journey to the dark side. Hopefully the dark side of profitability. And Mr. Uncle Mike, sir, if folks want to reach out to you, maybe they have questions about swapping their portfolio for calls or all sorts of other cool stuff, where should they go? What should they do?
Go to stcharleswealth.com or feel free to call me directly, 630-885-0017. I'm more than happy to chat with anyone if you're looking for a financial advisor who uses and understands options and is kind of fond of them.
He is indeed fond of options. Check him out for yourself, stcharleswealth.com. And on behalf of the Greasers and Meatballs and Uncle Mike and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for listening, for sending in questions. Remember, stay safe out there, listeners. We mean it quite literally after this show. And we'll see you back here in a little bit for TWIFO, and then back again tomorrow for Volatility Views. And it all kicks off again on Monday for more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.